Good morning. I am Stephen Davis, a Senior Market Strategist, RJO Futures. It's Friday, May 29th, and we're here to talk to you about the grain markets. My, how the time just flies by here as we wrap up the month of May. Okay, the corn market. First chart of corn here that I put in front of you. You can see we had a big bar up yesterday. Pretty good rally in corn yesterday. What are some of the reasons behind that? The demand for ethanol last week was up 9%, so a good little demand ethanol push in corn. And then you did see some short covering end of the month buying in the corn market. Now, front month corn traded about 100,000 contracts yesterday. You want to see that twice, 200,000 or maybe 250,000, 250,000 contracts. I think sometimes volume and open interest is more important than price discovery. So sometimes in the morning on my commute, when we're commuting downtown to Chicago in our office, you see 100,000 contracts of front month corn, July corn, at 5 a.m. in the morning, and that's when I know something's going on. So I'll be watching volume this summer and more comments on that. June now, next week we start, and it is a strong negative seasonal for corn. You know, we'll get the first corn ratings next week, and it looks like the corn is off to a good start here, with the exception of North Dakota. Any sustainable rally in corn, you're going to need to require a threat from the 2020 production. So corn pollinates in July. We're not there yet. We're 30, 40, 50 days away from any threat to production in the 2020 corn. So next chart is soybean. You know, the U.S.-China trade tensions, they remain elevated. The most recent this week now is the Hong Kong debacle going on over there. Soybeans just wear on this, and there is talk now that President Trump would slap new tariffs on the Chinese. One comment on that is maybe President Trump would wait till later in the summer when he gets a better reading on the election this fall. So we just need China in here buying U.S. soybeans. They've been buying a lot of Brazil soybeans, maybe depleting the supply over there, and buying U.S. soybeans too. Tuesday we started the week with soybean sales to China and soybean meal sales to unknown. Later those soybean meal sales were changed to Singapore. We just need on a daily basis USDA export sales announcements of soybean and corn to the world. You know, I talk about now, I think the world is reevaluating food security, and China reevaluating food security. You had a gigantic domestic soybean meal purchases by China this week. So they're getting their domestic feed coverage here for the rest of the year, and it's just interesting to talk about. You know, we had a two-day rally this week of 15, 16 cents in soybeans. It's a start. The charts here, we're trying to bottom, and we'll just see. Brazil versus U.S. soybeans are about even price-wise with everything considered. And here's some markets, too. The oat market just really trending higher, and the rice market really trending higher. Certainly two staple foods in the world today, and there's not a lot of volume in these markets, hence we don't talk about them too much. But take a look at chart patterns on those now. And then lastly here, we got the chart of wheat, and the Black Sea wheat export values, they seem to be rising, so that supports all boats here in the wheat contracts of the world. This strength seemed to come from European Union wheat, how their crops are coming along, and we'll kind of see if we don't get some leadership from wheat here as we move into the June summer months. And I think wrapping this up, I think you're going to see the speculative crowd and the hedge fund managers of the world today. They're going to be looking for markets that are going to prosper from normal living and normal spending behavior as we get back from this pandemic that we're going through. So I think soybean and protein certainly fits that bill. Let's all have an excellent weekend.